Welcome to the channel where we post all UNISA related content, so please like, comment, and subscribe.
Hello guys, welcome to another video. This is Advanced Tutors, guys. So guys, I can see some of y'all are liking, commenting, share, and subscribing. But guys, please carry on, guys. We are growing, guys. Just like, comment, share, subscribe, guys, so we can grow and I can post more video related content on what's happening, guys. So guys, today we're dealing with FAC 1501 assignment 1, guys. Disclaimer for everyone who's listening to this. This assignment is just to show you how things are done. All will be the same for every student, guys. So just note that and take that out of the way. But if you want to know how things are done and how to attack these questions, this is the video to watch, guys. So guys, without a further ado, let's start. But before we start, you should understand that for you to complete this assignment, you should complete unit 1 to unit 4 of the learning units, guys, before anything goes badly wrong. You understand, guys? So please, guys, focus on that. Let's start, guys. So you have to just say, so guys, I've started already, and this is my previous attempt. So guys, just understand that here time was not on my side, so I got 56. So here I'm starting a new attempt. So guys, this is 40 minutes, guys. So yes, 6 minutes has passed, but I will complete it in time. It won't be a long video. So guys, please read the statements before starting answering or looking for the things, guys. So as you can see, it says on 1st February 2025, B. Porter, a sole proprietor, or what called sole trader. For those who don't know what's a sole proprietor, it's a sole trader, opened a computer shop called Porter Computing. The entity is registered as a VAT vendor and the applicable VAT rate is 15%, guys. So guys, for those who don't know how to calculate markups and all that, you should view that, because this will show you how to separate the VAT and the cost price, guys. So guys, we need to read the second statement, this one, which we're gonna use to input this thing, guys. So all you need to know is that the amount that was initially paid for everything, including the VAT. If VAT was included, then it's including the VAT. So we made a sale, guys. So okay, not a sale per se, but we rendered services. So as we rendered services and we are a VAT application company, we include VAT in all the amounts that you're gonna pay or any. So the customer paid 1.610, which is the amount that is tendered into the business, and the total invoice amount was 610. This is the VAT that was inside that amount and the cost of repairing the laptop. Understand? So now, and the change is 0, guys. As you can see, I inputted it 0 because of there's no change. They didn't state anything about change, guys. So now, as we know, guys, if you want to find the original cost price, you take the amount. So take the amount. The amount is 1610. So it's 1610 times 100 over 150. We will give you 1,400. So it's 1,400. And for you to get the VAT amount, you take the total of the amount minus the cost price, which will give you 210 for VAT, guys. And they'll ask, VAT included was 210. That was the 210 from which was included inside this amount, because the cost price was initially 1.4. Then when you add the 210, this will be the new cost price, which is the 1610. So we'll put the 210 as our VAT included. So we're done with question 1, guys. We're moving on to question 2. So on question 2, now it's 3 sections in the transaction. three sections. They gave us 3 transactions. So let's go to transaction 1. We got a duplicate receipt. And what's happening in the receipt? We just know the amount was 132,000, no cents, and it was for capital contribution by the owner, who's Van Wyk. Understand? So the owner, no, it was signed by one of our employees, but it was received from the owner, which is B Porter, and the amount was 132,000. So guys, we need to know where does capital contribution fall under. It falls under equity because you're putting money into the business, which is now the equity of the business. And it also grows the assets, because now we have money in the business. So money is an asset towards the business. So we'll take one, because the bank is also included. So that 132 goes to the bank. Bank is an asset which comes from capital contribution, which is an equity. So the bank grows on the debit side because it's an asset. Assets grow on the debit side, guys. And capital is income. Income grows on the credit side. So debit, bank, credit, then the amount is 132,000, 132,000. Liability is 0 because we have no liabilities. Then transaction 2, original tax invoice. As you can see, these are our suppliers, guys. So we took something from the suppliers and we owe them because it says amount due. So we didn't pay up the full amount. So this is the amount due. We didn't pay up. So this is the amount that we need to copy down. Copy down. So what did it say? We bought these computer stuff. So we are a computer company, guys, and we're using perpetual inventory system. So a perpetual inventory system, when you disclose our inventory, you don't include it under purchases, you include it under inventory, guys. So we'll go here and say inventory and VAT input. VAT input happens when you buy something from someone. It's included in the amount that you're buying in. So we bought inventory, so it included, which is VAT input. We click on it. Then it will affect what? Our trade and other payables, which is the amount. Understand? So we will owe them this amount of money if we take these things. So our assets, which is VAT and input and VAT input, which is inventory and VAT input, will be credited, will be debited, because it's an asset. Inventory is an asset which grows on the debit side. And equity, there's no equity here, guys. 0. And liability, same amount, because now we owe them this amount, guys. So this is how, so far, the table is looking. Now we're going to the third transaction now, a duplicate cash sale. We sold something for once. And as we're selling something for once, we found out that this person paid cash. Now we know that it's cash. It's going to the bank. Understand? So you need to know it's cash. It's going to the bank no matter what. It's bank. Understand? What did he sell? We sold we didn't sell anything, but it's still going to a bank because we're getting something from the transaction. We repaired laptops, guys. So what you will come this side, will say service rendered or sales, because we count our income as repairing things as a sale, guys. So guys, this is the VAT amount. This is the discount amount. So you don't account for the discount. You only account for the money that you have received. So the money that you have is this one. Understand? including the VAT, this is the total amount. We need to write down this amount as the total amount. So we copy this, paste it here. Because bank is an asset, it grows on the asset side and also grows on the debit side. And sales are income. So equity is divided into two, which is income and expense. So sales is an income and falls under equity. So we'll also copy the amount here. And liabilities, we don't owe no one nothing, so it's 0. Then we go to the next page. Now it's another section again. So what happens, it says, so guys, this duplicates receipt. We just have to write how much we received, then write it down here. So what it says on 15 February 2025, Big Ram Computing completed repairs of the server for the client. Invoice was 14,600, VAT exclusive. But we know our company uses VAT, so because it's applicable. So the 14,600 will not be written down as the final payment because we need to also include the VAT. So how do we include the VAT? We say 14,600 times 115 over 100. $115 over 100. So guys, you need to follow the things, guys. You need to follow your things so badly. You need to look at your markups and all that. So the amount is 16,090 with there's no cents included, which is none. That means it's 16,790. Then you put the 2 zeros. Or 10, it depends on you. So we're done with this. We finish inputting the amount inside our duplicate receipt. Now we're going into question 4, guys. So now it's said determine the net worth of the company, which is SA Traders. So net worth means equity. What is the equity of the company? So the equity is assets minus liabilities. So let's take out our assets, and this is an asset, land and building. We own the land and the building. These are accrued income. These are money that we'll receive, but is not yet paid, but we will receive it. And this is our bank balance, the favorable one. So these are our assets. It's things that we own and can change and we control, guys. So let's start with the land, which is 1.340. 1, 2, 3. Plus we add the accrued income, which is 13,780. Plus we also add the favorable bank balance, which is 22068, which gives me an amount of 1,375,848. So with that amount, we minus the liabilities, which is 1, trade and other payables, and the mortgage loan, which is an liability. So after that, we'll get our net worth, guys. So we're minusing the 34,800 for the trade and other payables, and we're minusing the mortgage, which is 830,500. So the amount will be 510,548. So guys, we are done with the assignment. So guys, yes, let me just submit it and show you the results. But I think we miscalculated someone. For those who are not sure, please go back and calculate again, guys. So let me just say finished, then submit. So guys, now we got a 90%. Understand, guys? So guys, you need to make sure you understand what's happening here, guys. If you don't understand, guys, please join the group and I'll send videos on how to keep on studying for these assignments, guys. Please, guys. So guys, and don't forget to like, comment, and subscribe. And you'll find the videos in the description, guys. Thank you so much. Have a nice day, guys.